Larry, the bear traps out there are all over the place because it's been tough to be a bear. What do you make of the current market? The bears have been losing out for sure in the last few weeks.
Well, remember, in the fourth quarter, we had historic tax loss selling. So those that took advantage of capitulation in the fourth quarter are doing very well. And we expect more of that going forward. In other words, stocks that underperformed in the fourth quarter, we're seeing substantial outperformance in the first quarter, much more so than the market. And we see more of that ahead for the rest of the first half of the year.
Now, let's talk a little bit about what we're going to see in terms of the overall market theme and environment. We've heard that geopolitical tensions are at play. We've also heard that global interest rate policy is at play here. What do you think is going to be the most important factor in trading over the next several months?
Above all, Dom, we're really on the precipice of a historic change in the world in terms of fiscal policy. We put a note out in December, the first week in December, called Global Fiscal Relaxivity, Global Fiscal Relaxivity. Across the world, in the United Kingdom, in the United States, through Asia, you're just seeing a real relaxation in fiscal policy controls and the ability of central banks to deal with really deflation and secular stagnation that we've seen over the last year is limited. So politicians are going to go all in this year. So you want to be long commodities. That's our big call for this year. Weaker dollar. The global economy is going to rebalance. The global economy is going to outperform the U.S. on a relative basis. And that's why you want to be long commodities and global equities.
All right. So it seems like the global equity picture sits near record highs for many benchmarks out there. We've talked a little bit in the past about the credit markets, the treasury markets, and perhaps the lack of stress there. But there are places, though. Are there places out there that you are seeing perhaps some signs of stress here about what's happening with the whole financial system, perhaps in the credit or treasury market side of things?
Well, more so. See, the United States, we've really massively levered up on leveraged loan side, triple Cs, CLOs. So in the U.S., we're probably heading for some type of credit event late this year, maybe before the election or just after. I mean, it's a substantial credit event. And the deterioration in the loan space is profound relative to other parts of the U.S. credit market, in particular with the U.S., with the Fed not hiking rates, with the Fed offering $400 billion in a new accommodation through their balance sheet expansion. We shouldn't be seeing this type of stress. The amount of bonds that are trading below 80 cents on the dollar in the U.S. is still in an uptrend. So we see a major credit event in the U.S., a weaker U.S. relative to the rest of the world, sometime in the second, third quarter.